Mr. Irfan Razack is ready, Chairman and Managing Director of Prestige Group. Always, I look forward to our engaging conversations as always. He's been kind enough to join us. Mr. Razack, good morning. Thank you for joining us. How you been? How are things?
All good. Things are really good. No issues.
I must say,
Everything
I must
well.
say that your project is coming right next to the building when I stay. As somebody who lives in Planet Godrej, if a Prestige project is coming, it's a welcome delight. But trust me, the construction is a nightmare for a resident like me. Lot of noise and lot of dust and heat there, sir.
Yes, any construction activity anyway is always stressful. So I'm sorry, but I know we are trying to keep up to the timings, but it is a bit of a stress. Hmm?
I must say the project, I can see that, from 15th floor to 20th floor, it's just galloping. So the pace is absolutely extraordinary. I'll get into specific, but what's been your initial response to your foreign to Mumbai? Are you satisfied? Are you happy? Or it is a hard market to crack?
No, no, actually, we are pleasantly surprised and we are particularly happy because Mumbai has received us with open arms. If you want to know numbers, in the 9 months or less than 9 months, it's about 8 months since we launched a project in Mumbai. We have done something like about almost 1700 crores to date. So I believe that is a good one. And my team is pretty bullish that they will, this quarter also, they will achieve a target of 1,000 crores. So that's, we are pretty happy with the way things are going on. And there's a lot more to be done in Mumbai. Yes, I do realize that the expensive properties always are a problem. So we are going to launch a few expensive properties in the city now, both in Marine Drive as well as in Worli. Now we'll have to see what type of response we get for these.
Now that the Mumbai specific question is out, I'm going to go back to the big picture. The numbers for the quarter gone by. Sketch the big picture for us, sir, because margins are down. Is that largely because of the commodity impact or that is pricing which is coming under pressure?
No, I think margins are pretty much the same. See, only the last quarter we had some exceptional items. That's where the PAT probably went up a bit in terms of percentage. But even this quarter, we've got something like 162 crores worth of PAT. And this is accounting as well as operational are two different things. Because operationally, I'm very happy to report that as of 30th or 31st of January, we crossed our last year's number of 10,000 crores of sales. That's the top line. Now, bottom line is something else where we have to recognize revenue only on completion. When I say completion, not only completion, but handover or pass off title to the customers. So that comes up in sometimes in a lumpy manner. So certain quarters you have a big revenue, or certain quarters the revenue drops. But net, yes, but we've always been working with sort of reasonable margins, and the PAT margins are always single digit, and I don't see that going up even in after working and operating in a Mumbai market, because Mumbai also has its costs. There's a huge cost of approvals, cost of construction, all that goes on, and there's an acceptability on a price, right? Like rightly said, we can't overprice a product and keep waiting for business to happen. We have to price it reasonably so that it goes off the shelf.
Razak, hi there. Good morning. I just wanted to talk a little bit about the run rate as well. Over 9,000 crores pre-sales in 9 months. So would it be fair to assume that you will beat your pre-sales guidance then of 12,000 crores for FY23?
Like I said, January we've crossed 10,000, and our team is pretty bullish, and they are very, very, very sure that they'll cross the 12,000 mark, beat it by at least a couple of thousands.
Growth, according to you, be realization led or volume led? How is the sales mix looking like with respect to high end versus the mid segment sales? I know you spoke of a lot more projects in high end now.
Yeah, I mean, the high end in Mumbai will come now, but so far the mid segment is doing very, very well. And that is what is, I would say, the baseline for us. And that I believe will continue the run rate. Even in Mumbai, see, like the Prestige City, Mulund, Belenza towers have done very well because it's in that 2 to 3 crore category. The moment you go above that, if you come into central Mumbai, the prices are very different. And even in Bangalore, We are almost sold out. We have no inventory at all anywhere with us. And that's a very tough situation. That's how even this quarter's numbers in Bangalore have been less. But then lot more approvals are expected this quarter, and the RERA numbers will come in, and there'll be a lot more launches which will make up for the numbers.
Prestige's growth will be a function of approvals. I mean, for shareholders, I'm trying to understand this question for shareholders, and I'm going to break it for the benefit of our shareholders, Mr. Razack. One is that real estate companies, they follow a policy of revenue recognition. The more you sell, the more you're recognizing. That is subject to how much you are building. So walk us through that. What kind of revenue recognition we should expect going forward?
Yeah, no. See, there are two parts. One is the operational results. Like you said, see, we've got a target of 12,000 crores for this year, and we will definitely surpass that 12,000 crores. Last year, we did 10,000. And as of January, we've already crossed that 10,000. So it's safe to assume that we'll pass 12,000 crores. Now, that's operationally. And even what we need to watch on is the collections. Are the sales backed by collections? So we've already crossed the collection number, what we did last year. And we hope to create a good record this year also by crossing more than 8,500 crores. So that means operationally you're doing well. Now, as far as the balance sheet is concerned, the P&L account is concerned, the recognition of revenue comes only on completion of the project and handover of the project to the customers. So that's a function which will keep happening. So the more I sell, I also need to complete and hand over. So it's a two-pronged. Initially, I think 3 years or 3.5 years back, the accounting system was slightly different. It was on percentage completion. So we used to keep on booking revenue based on the percentage of how much completion had happened. Now that is not there anymore. It is on 100% completion and handover to the customer, passing of title to customer. So it's a big change, and somehow we managed to see that we are able to get this. But going forward also, it will be a bit lumpy. But I think that the investors and the market recognizes that as long as operationally we are doing well and the collections are coming in, it's understood that the company is doing well. This is in the residential segment.
Exactly a year ago, real estate companies had a different challenge. It was high cement prices, high steel prices, high labor prices. A lot of that is behind us. But when prices went through the roof, real estate companies, they had to take a price hike. Now that things are coming down, what will happen to the price hike what you've taken?
No, price hike, we couldn't take such a huge price hike. It's a very gradual, small price hike. It's not that things have really come down. The good thing is that things are stabilized a bit, but the labor costs and the cost of construction hasn't drastically gone down. It has actually come to that peak level and sort of stabilized there. That's what's giving us the strength that, okay, at least this is a stabilized cost for the next 3 to 5 years. So that will help us. We only hope that steel and cement doesn't go up again, because that will be a hit. But see, we have to tweak the price as we go along. And that tweaking just happens in small measures. And you can never jump the price very high, because then the acceptability from the client also will not be there.
Just for the benefit of our viewers, FY23, sir, what were the new project launches which were which were launched by Prestige Group? I'm talking about, let's say, Mumbai and other cities where you've just made your foray. And in the next 3 years, what are the new forays which you are planning, which will substantially aid to your top line?
Yes. Now, see, Mumbai, we've done, as I told you, the Prestige City in Mulund, and that is a large development. It'll keep happening over the next 5-6 years. We also have the Belenza Towers, ABC, which we launched. Now we've recently launched the DEF. We've got the Siesta Tower. Then what will come in is the Forest Hills much later, after these are completed. And construction is going on at a good pace. Hyderabad, we launched a Prestige Claremont, and that has met with a very good response, and the sales have been very nice. And very soon we are going to launch the Prestige City Hyderabad, probably end of this quarter or beginning of the next quarter. That's also shown a lot of excitement. People are getting ready. There are a lot of inquiries for that. In Calicut, we did a launch. It's a one-off launch. It's 1 million square feet. and that met us with a very good response. Bangalore is our baseline. Bangalore, there are a lot more launches coming in. And these the properties like Prestige Lavender Fields, Prestige Serenity Shores, Prestige Park Grove, these are the three big ones that are in the pipeline where the approvals are almost there. And hopefully this quarter itself, or maybe early next quarter, once all the approvals are in place and the RERA comes in, those will be the launches. So there's quite a lot happening. There's a big pipeline in every city we operate, including Chennai. Chennai also, there's a large project coming in called Prestige Pallava Gardens, which is in Pallavaram. And even that one is in the final stages of approval. So once the approvals and RERA comes in, even that will come into a launch mode, hopefully mostly in April or May of this current year.
Mr. Razack, always great to have you on 18 Hour. Thanks for joining in today.